Hello, everybody, and welcome to the next panel discussion delivered to you by SuperTrade.com. Today, we have a topic when headlines move markets. We are joined today by Oz Sultan from Quantum Economics, and we are expecting for two more speakers. I believe we had some technical difficulties. That is why we went live slightly later, and I hope that other speakers will be able to make it to this event as well. But let's let Oz do some extra introduction of himself before we dive deeper into the topic. I'm Teddy, your host for today. Hi, Oz. How are you doing?
Not too bad. How are you doing today?
I'm doing great.
Good to see you.
Would you
Good to see you.
kindly introduce yourself to our audience before we proceed?
Sure. My name's Oz Sultan. I am an economic director for tokenomics with Quantum Economics, and then I'm the chief strategy officer of Quantum Expeditions, which is a Bitcoin mining company based in Texas.
Right. What is your relation to trading? Like, do you have any experience? Do you have any interest in it? Do
I
you?
do. We've built exchanges before. So I've built two exchanges, neither which are still operational, thanks, OG crypto era. But
That's all
and
good.
then we work with algos from time to time, and I've got a couple of quants that we work with that develop algos. I'm just actually stepping back into trading myself. I had cancer for the past 4 years. So I was doing more advisory work inside of the space. Finally coming out of like the tunnel of the back end of that, and then just rebuilding things. But I follow the markets. I follow the stock markets in the United States. I follow the German markets as well as the Japanese markets. And then in terms of crypto and crypto trading, we're always looking for opportunities to exercise kimchi type premiums, especially with developing markets that are out there these days. But I will tell you that the algo trading space now is big, but it's going to get, I think, exponentially bigger as we start having these new luddites coming inside of the crypto market. One, with what Trump's doing in the U.S., right? We have this huge push to get from, what are we at now, 160 million wallets globally to something like a billion wallets over the course of the next couple of years. And then two, with the big changes that you have with MiCA and regulations inside of Europe. What's going on in the Middle East is also very promising. But I think that also leads to the fact that you're going to have a massive, massive amount of folks coming online. And, most of the folks that are going to start trading inside of the ecosystem are largely going to be using bots or some sort of automated system. There's not a lot of day traders the way that there used to be.
Yeah, exactly. You have quite an interesting experience, I should tell. And I'm a little bit curious, like, did you manage like your own accounts? Like, what is your experience with that, like trading personally, or did you only touch that subject with regards to your career?
So for the first couple of years, we were really just kind of building the technology, right? I mean, there was a significant amount of capital inside of that. Um, I will tell you, if you get any kind of serious illness, just expect all your Bitcoin to get washed away because these things are super expensive.
Yeah,
But the building an exchange is different today than it was even in, I would say, 2016, 2018, 2020, right? You have different technologies that we're leveraging right now. There's new API stacks that are out there. There's abilities to do direct connects to a lot of exchanges where the APIs were a little hokey, about a decade ago. Um, so, in terms of, I would say, automated or algorithmic, I've used a wide range of tools. While I was in a hospital bed, I was just kind of testing some stuff out in terms of some of the early automated trading tools. I will tell you that there's a lot of them out there that they seem to be okay, but they're really only good for folks that have minimally about 150,000, $200,000 worth of crypto that they want to play with, because they're not orientated to your small trader, your small investor. On the flip side of this, I'm friends with a lot of like the old OGs like Michael Turpin. And one of the things that I've always sort of hyped up is Turpin has a book that came out recently about the Bitcoin hype cycle, and I don't have a picture with me, but it's a one second live stream. It's a picture of a spiral, right? And what it shows you is that you have these different time vectors and sort of triggers inside of the market based upon what the performance has been in terms of Bitcoin mining, where we are based on each halving that we've had, since 2010 forward, as well as, what the different market dynamics are on each sort of like quarter by quarter basis. And I think that is probably like the Bible, so to speak, out there in terms of what you could be looking at from Bitcoin investing. In terms of altcoin investing, I think we've got a pretty wide swing of what's out there. I think you saw recently the pump fund was taken down. And so there's
Yeah.
this whole meme coin extravaganza that we've had for not really a long period, but I mean, everything seems to cycle about the same length of what the NFT era was. Like it's somewhere between 12 to 18 months. And I think the meme coin era is going into like generation 2 of the meme coin era. It's not that, you could be some 10-year-old and get on pump fund and come up with a token with a funny name anymore. I think we're getting back to your Doges and your Bonks and things like that, where people are looking for a little bit more of a thesis inside of what the token is. So overall, I see there's the Bitcoin trading ecosystem where I'd say, listen, if you're getting involved, you want to trade, read Turpin's book. There's the altcoin ecosystem where you've got a lot of stuff that is, I think, driven by the price of Ethereum. And then you've got a lot of ebbs and sways based upon where those altcoins are in terms of their ties to that network, as well as what we've got in this third arena, which I would call is your DEX tokens. So stuff that is largely like BNB based or, VAX and other tokens that are out there. And then, kind of the tail end of that third group is the meme coins. And it is yet to be seen because I personally think so I do a lot of work in government affairs within the United States. And a lot of what we're focused on is, if you're an exchange or you're a company that's trying to come into the US and get licensing, we help with that sort of stuff as well. The interesting thing I think we're going to see inside of the next 6 months is that you're going to have DOJ enforcement on meme coins. So as soon as that happens, expect a big capitulation in a lot of meme coins because you had a lot of folks that were trading what we call unsecured or unregulated securities inside of the United States. And I think that's going to affect US traders more than it's going to affect anyone else. But I do think that a lot of these tokens that had experienced serious rug pulls, or the ones, where we saw some guy murder himself online, because he had rugged himself, or again, like the 10-year-old rugging his entire community and then rugging them again when they came back. Those types of things
Yeah.
are going to face
And
enforcement.
some people actually regarded these I'd call them thieves as heroes. Actually, they became a role models for some, right? And that creates like a real negative impact on the whole industry. I've been actually very happy to see Pump Fund taken down, albeit it went back up, at least on X, basically the
Mhm.
next day.
Well, I think what's going to happen is there's regulated domains, right? So the United States, Europe. I don't know if Pump Fund is still up in Europe, but it's taken down here. I'm assuming it's taken down there. Then you're going to have other domiciles around the world. It may still be up in Asia. I haven't looked into that, but there's still the opportunity for people to build these meme coins there. You're talking about the opportunity to make millions of dollars overnight for a lot of folks. The question is going to be in terms of those tokens and their liquidity, and then also trying to convert those to other tokens. how much longer that lasts inside of this market ecosystem. Because if the platform by which you're executing these tokens doesn't exist anymore, and I've advised on, God, over the years, maybe like 40 or 50 different token projects. A lot of smaller ones, some that have gone really great, other ones where you're working through the entire process and you find out that the founders never made a company. There's all sorts of funny stuff out there. But I think a lot of these folks that aren't protected by a corporate shield and created a token and live in either the GCC, which is the Arab countries, America or Canada, or Western Europe, they're going to face some degree of enforcement over the course of the next year. And mind you, the focus here now is because we have a large scale cross-border payment system coming into play on a global basis that's going to be leveraging XRP as well as a number of other tokens for the backbone. Why? Because we've had Bitcoin cross-border trading going back all the way to 2015, but that's countries like Argentina and Colombia trying to work against the fact that their currencies themselves were super devalued. As this moves into this new ecosystem where you have an XRP based backed cross-border system for many countries, you're going to see probably a cascading number of tokens that get buoyed up by that, and a lot of that too is tied to regulation and then standards, right? So what is it, July ISO 20022? And let me ask you, do you know about ISO 20022?
So 2022. Pretty sure I don't.
That's fine. It's a payment standard, right? So
Well,
this was
ISO is a standard, that's I know, but exactly this number doesn't tell me anything.
you've got a couple of them. There's 20,022, 27,000, 27,001. I won't get into the latter ones. 20,022 is the one that everyone inside of the crypto ecosystem and everyone listening to this needs to understand. Because if you want to make some money between now and November, what you want to look at is there's 6 cryptos, XRP is one of them, that are certified for 20,022. And you're like, what the hell does that mean, Oz? Very simply put, the SWIFT banking system, which is the system by which all payments are made across the world in between banks, in between countries. So, when Ukraine takes a couple $1 billion from the United States, that's typically paid from the Treasury through SWIFT to the central bank of Ukraine. If you are transferring money from America to Germany, you're going to be using the SWIFT system. This is what's used inside of wire transfers, right? So the SWIFT system is being shut down, and that shutdown process starts in July. This year, the first step of it takes effect in November. And
Well,
so
that's
November,
actually massive. Swift has been around since 1970s, isn't it? Or
yep.
60s.
And it's not going to affect everyone. It's a 2-year phase out. Your developing countries are still going to probably be using Swift, I would say, because the phase out is currently scheduled for 2027. I would say that you're probably going to have developing countries using Swift until 2030. But the goal here is to move us on to new systems where they can eliminate dark money or black money, depending on what you call it in your country. Illegal transfers, illegal financing for illegal arms transfers, human trafficking, and that kind of a thing. That was the goal, right? What I think it's going to do is it is going to create midterm institutional chaos simply because not everyone's prepared for this. Banks aren't necessarily prepared for this. And you're still dealing with places like there's countries in the Gulf and countries in Africa where instead of doing SWIFT, they're still using Telex. And I don't know if you know what Telex is, but it was it's almost like a telegram, but it's a telegram system that works. And but when I say Telegram, I mean
To
the old
transfer money,
Telegram,
right?
like where
I
you,
believe African countries have this kind of system. Correct me if I'm
yeah,
wrong. They use it a lot because you don't need internet, right? You basically, you don't need a
yeah.
smartphone. You just need a very simple, the cheapest old type of mobile device, and you can
You don't even,
actually do
it's not
payments.
even on mobile. It's old POTS, plain old telephony system. It runs over copper wire. And the reason for that was because a lot of these countries had, they had telephones, but like the telephones go down or the power goes down or there's things like that. But from an investment perspective, if you look at the tokens that are certified for 2022 in June, what is today? Today's the 19th. So I would say by the end of June, you're going to have a lift of all of those tokens. There's a breadbasket of 6. The XRP is one of them. Then you're going to have the November effect. And in the November effect, that's where they start the first phase of shutting down SWIFT. And what that means is for most countries, you'll only be able to make your cross-border payments in one of these cryptos. So all of those cryptos are going to be lifted in terms of price. And why does this matter? Well, if we're to draw like a big diagram of this out, and you just say like up here is your trading ecosystem of your black rocks, and down here we have like algorithmic trading that's being done by major market makers, and then here we have everyone else who's trading inside of what they're doing from day trading to algorithmic trading. And this is also just inside of the crypto ecosystem. You now have to add this huge tranche at the bottom, which is how are these tokens being affected in terms of price and volatility based upon their utilization now inside of major market ecosystems, where they're becoming, the dollar, so to speak. They're becoming the pound. They're becoming the euro. For settlements in between countries. And if you're to ask, like, why would we do this, right? But it makes
So
sense for a
SEPA
very
itself
simple.
is very much outdated. It's slow, it's expensive. I think there's a good reason to renew it, at least in the
Well, no,
US,
the
right?
the biggest reason to move off of Swift is okay. So how many? Forgive me because I don't know every single currency, but your currency trades at what, like how many to the dollar?
Roughly 40 hryvnias is $1. So like 2.5% of a dollar is one hryvnia. How to
Okay,
just
so let's say 40 hryvnias is a dollar, but let's pretend this. We really kind of need a third person for this, so I'm gonna use my mug, right? So Hello Kitty is also, this is the largest mug I could find, which is why I have this. So let's say that you produce milk, right? And I produce cheese, and Hello Kitty sells the cheese in her supermarket. And you're in the Ukraine, and I'm in Germany, but you have like the best A2 grade milk. I want your milk. When we go from the hryvnia to the euro, you will typically lose somewhere between 8 to 20% in conversion fees, right? So it's not just that I have to pay you in your currency, I am now losing 20%. So if my bill was 100 euro, it's now effectively 108 to 120 euro that I have to pay you just with the conversion fees. And then when I sell the cheese to Hello Kitty in her supermarket in, say, Canada, and we're going from the euro to the loonie, there's another 8 to 20% conversion fee for that currency, right? So that's where the banks have become wealthy over decades and decades, is in Forex, as well as lending.
But
What
excuse me to interrupt you. You are mentioning this 8 to 20% like as an exaggerated dramatic example, right? It can't be that high. Basically,
It's
tax
that
level
high.
of fee, is
It's
it?
that high. That's what the currency conversion rates are, depending on who you're using, also depending on your bank, right? I mean, in many cases now, like Stellar had worked with IBM Hyperledger since, God, I spoke at a conference in India in, what was it, 18, and they were real big in implementing this. They were using Stellar. So one of the things that was useful in the Ukraine, I know because you guys had a lot of currency volatility, was that for exchanges in between European countries and you guys, they were trying to do a lot of settlements in Stellar. Why? Because if I give you a bill in Stellar, and I pay it in Stellar. I get the network fee charges. I'm not dealing with bank fee charges. I'm not dealing with exchange charges. I'm not dealing with any bank override on that. I'm not dealing with Swift charges. I mean, do you see what I'm saying? That 8 to 20% becomes like, it's like your phone bill. Like when you look at your phone bill and you're like, there's all of these hidden charges. That's how the global economic system works. They make a ton of money on all these fees. So the big thing that's going to happen with crypto coming into the banking ecosystem this year, and also what the Trump administration's doing and driving things. I don't know if you saw it, but the Genius Act just passed in America, and that affects a lot of things inside of the crypto ecosystem, is that a lot of these tokens that are certified for ISO 20022, they're all going to increase in value, and then secondarily, there's this whole discussion about XRP and their private ledger, and when the private ledger goes public, right, and what the increase in the price of XRP can be. I mean, there's speculation that it could go as high as $11. So, we're in a real Wild West. Like historically, the only thing I can compare this to, and I have to go back 100 years, is there was a period right before the crash of 1929 where, the first major rug pull in the world was a company called Swedish Match. And it was this guy who was literally selling boxes of matches, right? But he was selling them in like massive, massive quantities. And he ran around Europe getting, at that point, it was bearer bonds, because that was way before letters of credit. But he was getting bearer bonds and creating fraudulent bearer bonds. And it basically bankrupted an entire industry. And it's a great story to read, right? It's
You
like
mean
the
the entire
origin.
industry of match production or banking sector?
Both, because Swedish Match is the first major rug pull in history. It's like the first major Ponzi scheme that was
I
out there.
see.
But that's where they started setting some of these regulations. And the only reason I bring that up is that we're in that kind of a Wild West right now with meme coins, with altcoins, also with like the amount of rug pulls that you see on a regular basis, right? NFT rug pulls, digital asset rug pulls. Um, I, I anticipate that, as we move into 2026, the next big thing is going to be digital asset transformation. That's something we do. Like we create real world assets. That's Sultan Interactive, which is
What
my
kind of
company.
assets do you tokenize?
Right now we're tokenizing real estate. It's mostly real estate, but we're starting a process where we're going to be tokenizing rare earth minerals, which can now become a lending class, right? So the same way that you were able to, go to a crypto bank like DNA Bank and say, "Hi, I'm going to put 2 Bitcoin in, and I'd like to borrow, I'd like to borrow $200,000, right?" You're going to be able to do these types of things with the stuff that we're able to tokenize coming from the ground, coming from the air. Air rights could be tokenized. You can pretty much tokenize anything as a real world asset. And that creates this new dynamic that is exponentially larger than what we saw with NFTs, what we've seen with meme coins, and it's starting in the Middle East. So there's a stable coin on XRP, I believe it's called RLXRP, by which you can buy a variety of different assets. Right now, it's real estate, but it's also Treasury notes. So the United States Treasury started real world asset tokenization a couple months ago. And right now, if I'm holding an XRP stablecoin, I can buy Treasury notes. Now, there's a limitation on this. You have to be like a buyer that would be putting in 30 million or more. So I'm obviously not in that category. But for any of you large whales out there, if you're looking for a hedge against inflation, or if you're looking for a hedge against volatility, we've now taken the crypto ecosystem and the treasury and the bond ecosystem, and we've wired these things together with digital assets.
That's interesting. But let's go a little bit back to like the official topic of the event. So because that's a big problem for traders, especially day traders, who basically try to sketch all their technical analysis, then check all the fundamentals for asset in particular, and then boom, like Trump, declares war on Elon Musk, starts bombing Marshall landscape, and then you see everything goes to bust. So I wonder, like, what perhaps you can tell about the quants with whom you work, like how they prepare to such events, like maybe various black swans, and also how they reacted, how they adjusted, their risks to such
Mhm.
events. Is there like any standard procedure for that, or is it just more of the personal trading style of a particular trader?
So here, hold on. There's this one quant we're testing some stuff with right now. I'm trying to see if I have his matrix that I can bring up. It's interesting because the quant algorithms right now are, I would say, in 3 to 4 different categories. You've got the old quant algorithms, which were based on the kimchi premium. They have been built over the course of a couple of years, and they are doing things largely with forex type strategies inside of the crypto market, but those are used by institutions. Then you've got the private wealth quant algorithms that are out there. Those again, I think they're kind of early. I mean, they sometimes work, sometimes don't. Sometimes they post a yield, but I think on average, I've seen them kind of at a -2. I don't know if I would necessarily get involved with those. Now we have, what we all of our bot trading, right? That's out there. But I think the stuff that is about to start being developed right now is the opportunity to start looking at these markets from a dimensional perspective. And those algos, I've seen 2 that are promising, and I'm under NDA for a lot of this stuff. But what we're talking about is, before you were just trying to map one currency or one uh, token in between 2 markets. Now, what you have is almost the opportunity for spectral analysis, whereby you're mapping the same tokens between multiple markets with multiple outlooks and multiple use cases at the same time. And a lot of this is being driven by what's starting to happen with real world asset tokenization. So, like, for example, in the Gulf, where they're, I personally think that the Dubai real estate market is overheated at this juncture. And I look at like what's going on in America as well. Like, we've in New York City, for example, we've got $6 trillion worth of commercial paper that's set to default if they can't sort things out or refinance it by the end of the year, right? So if corporations and banks are able to tokenize all of this commercial paper for real estate, they can actually go and create additional debt or financing vehicles. So in finance terms, it's called subrogated debt. But what they can do with that is they can actually like use the debt to finance the debt. It sounds kind of hokey, but it's what really created the 2008 market crash. And so it raises a lot of questions as all of these new technologies are being developed, because again, we're very Swedish match, right? We're right there. We're at like 1928 in terms of, regulation is coming, but many of these markets are still unregulated. I think the tokenization of digital assets is regulated inside of Dubai and some of the Gulf countries under VARA, which falls under DIFC in Dubai and ADGM in Abu Dhabi. But in America, sort of, we've kind of got some guidelines on this right now. For the stuff that I'm building real world asset tokens on, we're doing a mixture of XRP. We've had a request for Bitcoin tokenization. Also, if anyone's ever interested in this kind of stuff, my Twitter handle is Oz for NY. I'm happy to discuss this. But there's the same way that we had all this volatility in 16. Like, do you remember in 2016 where half of your crypto companies like collapsed and half of your tokens collapsed because they had completely shitty treasury management? Like, everyone had
Well,
raised
it's
all
been
this.
like an ICO boom back then. Most of those
Yep.
companies didn't have to, maintain tokens in the first place. It's like a dot-com boom, but for tokens, right?
I think it's happening. It's about to happen again. And it is about to happen inside of real world assets. And it is going to be real world assets tokenized on a variety of ledgers out here. And I think the most amusing thing is that not only are they going to be an XRP, because that's where a lot of it is, but you're going to have stuff on Bonk, you're going to have stuff on Doge, you're going to have stuff on a variety of different ledgers, depending on who wants to do it and where they're looking to do it. And the reason is because Bonk and Doge are already in the federal payment ecosystem within the United States, based upon what Trump has already outlined inside of the United States and what's tying into the Genius Act, which was passed last night, right? So you've got a variety of altcoins that are now going to become mainstream sort of payment rails, so to speak, over the course of the next 5 to 6 years.
I see. That's interesting.
I'm sorry if some of this stuff's like kind of crazy high level. It's just I was on the phone with Australia until like 4 a.m. and we're digging through some of this stuff. The Genius Act is going to change a lot in the United States. We now have the first path to direct licensing for crypto exchanges, which we didn't have before. Because like Coinbase and Kraken in the US, they were kind of put together the same way that early exchanges were put together in Zug and Zurich, right, under FINMA licensing. Like, it was kind of sort of cobbled together. And there's a couple exchanges that have this. Now we're going to be able to see like large scale market proliferation of exchanges, at least in the US. And I know of 2 new exchanges that are being developed inside of the Gulf, right? So I think you're going to start seeing a lot of movement and liquidity coming on from like newbies and Luddites who are jumping into the market.
So I'm really curious, do we need so many more new exchanges? I think there are already plenty, right?
They're trying to build tier ones, you know. I mean, there's thousands of tier 2s and tier 3s, and you can trade all your shit coins in there.
I
But
mean, I believe that, and that's purely subjective, but I believe in order to build tier ones like pre-planned, you actually need government involvement, like at every level, at every step. I mean, if you're just an entrepreneur building your exchange, you may dream of tier one, but that's not very likely to happen, right? I've been, collaborating with multiple exchanges that over the years that have been claiming that they are Binance killers, but they basically didn't stand, the test of time. So I'm gonna ask you like another question that is also related to the main topic. So it all relates, to various reports that are released regularly in the US. For instance, non-farm payrolls or consumer price index or Federal Open Market Committee, like those seem to have very significant impact on the markets, like depending on whether the numbers they're showing are expected or not, like how much they divert from expectation. But are there any of these that are more significant to the market than the other? And what actually, could you please just explain our audience, like, let's say in a high level manner, like why these influence the markets and why specifically these, indicators do matter?
So it's interesting. Up until the war that you guys are having with Russia, you and Russia were our largest purchasers of grain in the U.S. And there's a number of reports that come out across the course of a year. A lot of people aren't aware of this. The farm report's one of them. The consumer price index, which is reported a couple times a year, is one of them. And then the Treasury rate announcements is a third one. So typically the only statistic that people are looking at inside of markets, if they're traders and they're not really working inside of finance, is that they're looking at the Treasury rates, right? And this week is an interesting week because you've got a Treasury rate announcement, I believe, for Friday inside of Europe, and ours, I believe, is today. Um, and so the big question, kind of from the Biden administration to the Trump administration, has been, can we keep interest rates down? Because if we keep interest rates down, we keep the opportunity for banks to lend high, and we kind of stabilize against major inflation in terms of the lending cost for purchasing houses. And if you're driving an economy, typically what you want is you want lower interest rates that drive lower mortgage rates that incentivize folks to go out and purchase property. When you start putting this together, because it's multiple pieces that work inside of a very complicated ecosystem, you have to look at that those interest rates affect lending across every single sector or aspect of the economic ecosystem. Farm loans, which farmers have to take out every single year based upon like what they estimate their crop productions are going to be, that kind of a thing. Then when the farm report comes out, that tells us what our yields are going to be, right? So when those reports come out, that starts affecting the prices of commodities. But for most people that aren't aware of this, that affects things like the Chicago Mercantile Exchange, or what's launching in 2027, which is Y'all Street, which is the mercantile and stock exchange we're going to get in Texas. That long-term effects, well, short-term and long-term, it affects the price of products and the expected inflation on products. From a cross-border perspective, because everything is kind of global now, it also affects what we have in terms of projections for trade, as well as projections for revenues and taxes that are going to be taken in by any specific country. It's not just the United States where I am. And then when you add to that things like CPI, the Consumer Price Index, the Consumer Price Index is largely tied to a factor called GDP, which is gross domestic product, but it's really tied to something called AMI, which is area median income. So, for example, you're in Kiev, right? And let's hypothetically, because I don't know the topography all that well outside of watching Jason Statham movies. And so if we were to cut Kiev into like 4 pieces, and we were to say that this is the wealthier piece, this is the poorer piece, this is middle class, and this is lower middle class, we would look at the consumer price index per area. We would then see when the consumer price index comes out quarterly, right, what the change would be for the average breadbasket of goods, milk, bread, so on and so forth. But then we would have to look at the area median income. And the area median income is like, what is the average of people earning inside of this area? And so if it was, say, something like the US equivalent of $50,000 per year in the middle class area and $80,000 per year in the upper class area, you would see different impacts from consumer price index volatility on what we expect to be the cost of goods inside of those different areas, right? So when you start putting all this stuff together, and it's relatively complicated, and that's just kind of like the tip of the iceberg in terms of the macroeconomic perspective. You have these big reports, the farm report, the CPI, so on and so forth, which are macroeconomic impacts affecting you personally where you shop and live, which is microeconomics, right? And where this kind of ties back to crypto is that my personal purview, and I don't think any economists, and I'm a tokenomic economist, right? I don't think a lot of economists have quantified this yet, but I think from a macro perspective inside of our ecosystem, you've got Bitcoin, potentially Ethereum, and oddly, weirdly XRP kind of coming up just because of where it was placed for cross-border transactions as kind of your macro effect drivers. You've got your microeconomic drivers being all your altcoins, and then what you could even call like regional economics, which are, again, this only gets talked about in rural areas in the US, but developing countries would be where all of your shit coins and your meme coins would be, right? So a big driver, let's say if Bitcoin is driven up to $110,000, you're going to see a cascading lift inside of your altcoins, but it's going to be algorithmically smaller, right? If you're to draw kind of like an algorithm line of like what the correlations is between the rise in this and the rise in this. And then here inside of your what we call a regional market, which would be your alt shitcoin market, you're going to see all sorts of volatility, because as this asset class is somewhat correlated to this asset class isn't correlated to either this asset class or this asset class. This asset class, which is your meme coins and your shit coins, are driven largely by effects inside of the internal economics of each one of those tokens. And that's, anything from two executives in the company getting into a public fist fight at token 2049 and the token collapsing, to someone rugging it, to someone having absolutely horrific treasury management and their wallets getting hacked, to only being on a decentralized exchange and oops, all of our liquidity's gone, and it's over in Tornado Cash now. So that's kind of, I guess, that's a big explanation, but does that help?
I hope our listeners can make their own conclusions, but it makes sense. I mean, very often we see lots of predictions regarding any specific kinds of assets, let's say some fungible tokens, right? But then apparently their price in terms of dollar or Bitcoin is heavily, affected by, Bitcoin price itself and its movements. And basically, all those fundamentals and other, analysis with regards to that asset could just adjust the price only a little compared to bigger events. So but let's talk a little bit about black swans. Like, what events from, let's say, past 5 or 10 years, or maybe just past few months, you remember that actually moved markets significantly and were really, really, unexpected events?
So this was the book I was talking about. I don't know if you can see that. It's called Bitcoin Super Cycle by Michael Turpin. And the super cycle is that this goes back to that circle diagram I was talking about. He's mapped it since 2010 in terms of what the market effects and the echo effects are from halvings, from our down cycles, from our up cycles, as well as what the time frames are on this. And typically your Bitcoin hype cycles of growth or stagnation flow in 6, 12, and 18-month tranches, right? Now, if we were to call that kind of the larger effect of market pressure across the entirety of our market, you then have to look at what's the secondary market, which again we'll call our Ethereum and ERC20, TRC20 coins that are out there. I also don't want to get into the Tron discussion that kind of like goes off into the weeds. But the secondary effect that you have from these black swan events is interesting, correlated back and forth. So you've got your weird black swan events, which are like your FTX and sorry, I'm cancer braining here. Dotron, what was his
Kwon?
token called?
Kwon? His network is Tron.
No, not Doquan. God, I'm blanking here. It was that Korean one that he pulled all the Bitcoin out of. This is the problem after you have chemotherapy. Sometimes you forget things. But anyways, those are different types. I think those are what I would call mass market black swan events, where no one had really expected this, but someone was a dick and they took all the liquidity out of the ecosystem, and then someone found out, and then all of a sudden you had a massive wipeout of the industry. The other black swan events that do happen periodically, which are where you're going to have some kind of an economic market crash, or you've got absolute capitulation in terms of the price of certain tokens. I think that's becoming more, it's less of what it was in 2016 and 2018, where it was more correlated to bad management, bad treasury management, or, just bad tokenomics, right? Because we've seen that over and over again. And it is now becoming more correlated to any kind of collapse inside of the market. And we've had a couple instances historically where folks like JP Morgan have come out and said, no, Bitcoin isn't an asset, it drops, and they go and scoop up a bunch. But now we're starting to see that kind of impact from ETFs, simply because they can buy too much and sell too much, right? And they can start triggering certain network effects and market effects that can kind of lead up to a black swan. That's kind of like my 2 cents on it.
It kind of pleases me a bit that you mentioned Michael Turpin a few times. I remember in the summer 2021, I've been pitching my startup to him. It was supposed to be an NFT marketplace with an ability to fractionally buy and own NFTs. Sadly, it's never seen the light of the day because our lead developers left. But Michael spoke favorably
Mhm.
about the idea. And we are joined by our trader, Love Dove. Hey man, can you speak back? Can you hear us?
Here, here, here. I can hear you well.
Awesome, awesome. Hey man, how you doing?
Yeah, yeah,
So
yeah. I'm
Hey man,
very
how's it
good.
going?
Yeah, I'm very good, man. Thank you.
let me introduce Love
I've,
Dove
I,
to yeah, let me do a very quick intro and then you can continue. Sorry. So basically, for those of you who don't know, Lavdov is our trader at SuperTrade. He's beaten our two-phase challenge and received funding in our prop trading firm. And about a week ago, I think we released a podcast with him. So you can certainly go and check it out right after this live stream. But first, let's hear from the man. So, hey man, let me ask you a question. You as a trader, because you have quite a substantial experience, in trading various types of assets. How do you tackle various, macroeconomic events? Then they hit your analysis, your projections. How do you handle that, and how do you adjust your risks?
yeah, all right. I think so first off, I really need to apologize for coming on really late. I just really had some challenges there.
It is totally fine. We couldn't even get on to begin with. It's super cool, dude.
Yeah, yeah. Thank you, man. Thank you so much. Right. So first off, something in me just likes risk so much. I don't know what it is. I don't know why. So um so before now, all I just do is because I usually see it this way that there's no way you could trade the financial markets during any major news or maybe even some minor events and all of that that will not be gambling. So I just I attacked it as such. I
Mhm.
attacked it like gambling, and I just just place my bets, in quotes, bets in here,
If it's
and
meme coins, it
that
is gambling.
exactly. So there was really no, there was really I just went with the wind. But in taking my time to study, I started realizing something that you know, I could have gone, full on, maybe just looking at the news. Okay, is this news bullish about this, or is this news of, a bearish news, maybe concerning this commodity and trading, or concerning this pair or something. I could go that route and just say, okay, let me just place my trade based on that, right? But I started noticing something that no matter the news, markets react at certain major levels. It could be the daily support level or the daily supply level or the daily demand level, right? And that was when I started realizing that, and I realized that okay, see, all of these charts we are looking at, they are telling stories,
Mm-hmm.
right? Stories of people's decisions and indecisions. Stories of people's activity. Somebody just got slammed at work, and that frustration is poured into their decision on maybe a stock they buy or a stock they do not buy, or they just decide to dump a stock, or this naughty inheritor, let me just put it that way, who just goes and squanders, you know, all of the life insurance and all of that. All this chart is, constantly telling the story, right? And it's not a hazard. So I started, looking at it as such, and I started getting even more patient, because one of the things we have to also do in terms of investments, trading, and looking at the market is patience. Like I said, you are looking at a story, a story of people on that chart, right? So I started looking at it as such. So I started getting more patient. Of course, in learning all of these, you've already lost a lot of money, right? So I started getting more patient, looking at the chart carefully, looking at even the news and the story the chart is telling. And then if I need to take a trade or something, I just go in that line. And truly, right, there seem to be more positive results, when I started thinking that way. Because I realized that no, trading is much more than just, your skill. It's more than it's also more about how you can understand psychology, the
Mm-hmm.
psychology of life, the psychology of people, and how you can, respond to that. Right. So yeah, yeah, that's it. And sometimes I just stay clear, because especially since this from economics, things have really been a bit sideways, and much more than technicalities, you needed patience and all of that. So I've just been really patient, so I just stay clear. uh,
If
I
you're
just
if
stay
you're
clear
looking at
about
it that way, that's a really interesting perspective to take on it. What is so? Let's say that these are all stories. What do you see as the triggers inside of those stories that make you, either jump into something or jump out?
yeah,
No, I'm asking.
yeah. Oh, can you repeat the question, please?
Oh yeah,
Can
yeah.
you hear
So
me?
so if you're looking at market indicators as stories, right, which they are,
Okay,
as I never even thought about that. I was like, that's kind of fucking genius. Um,
thank you.
what do you see as the triggers for you that make you jump into something or jump out of something?
Okay, so first off is pattern, right? No matter how, haphazard human beings can be, or it can be difficult relating with people,
Hmm.
and that's why we have chart patterns, actually, right? You can see the behavior of people, no matter how haphazard, it follows a pattern, right? And if you can establish that pattern in a given period of time, right? As represented maybe on the charts, right? I think there will be higher success rates, right? Like I said, in a given period of time. And I said that specifically because of the period we've been in, right? This is not a period where everybody is just okay. Let me put it this way: the terrain is shifting, the economic terrain is shifting, right? And we usually experience this every now and then, sometimes maybe every 70 years. And in those 70-year period, we usually experience, mini shifts and mini transitions, right? So, what we're experiencing now in the financial terrain is a major transition going on right now, right? That will
Hmm.
affect, how we do finance, how we do economy in the next decade, right? That will affect how we do finance in the next decade, because we have a lot of things coming into the play right now, into the financial play right now. A couple of years ago, we didn't really have crypto as it is. We didn't have a lot of ETFs as it were. We didn't have a lot of stuff in the market. We didn't have all of this liquidity coming into the market as it were. Some of this liquidity that are being spread around were concentrated in a field, right? So it's a new terrain that we are experiencing, and as such, when we approach the chart, or we approach making money, or we approach the market flow, or whatever it is, we need to approach it as such that things are changing. There is a transition. So whatever decision you make, you can't be making decision like you used to, let's say last year, 5 years ago, or a decade ago, because now the terrain has shifted, and people are responding to it, right? Before, January this year, right? You know, there are things that people put their liquidity in. But now you see, with with Trump coming into the picture, even countries are responding. So the financial terrain is changing. That will affect the decisions of people, right? And what we now need, in that period is first patience, and then to watch. And immediately that pattern is established, because that's the thing. We are beings of habits. Immediately that pattern is established, we immediately get comfortable, right? And then we started following the pattern. And then you be sensitive again when that terrain shifts, right? So I think this is one of the ways I am beginning to approach the market, right? That is really helping me, right? Yeah, apart from just the technicalities, and I don't know if I was able
Mhm.
to, let's say, respond to what you asked.
No, that's an interesting one. Looking at, I was actually I'm trying to find this image that I had. There's I posted it before, but it's like buried in my tweets. It's basically what the ecosystem of cryptos around the White House conference were, and I think,
Mm-hmm.
like, and this is what we were talking about earlier. I said that ISO 20022 is coming in, and these standards don't mean a lot to a lot of people, but you're going to have 6 cryptos, including XRP and iCancerBrain and the rest of them. Um, but that's where I'm looking for the little diagram.
I'm a little bit confused here, Oz, because every time you say X or P, you say there are like 5 more, but are those 5 not like majors, not like Bitcoin or Ethereum? Are those
They
5
are. I
something
have
like,
to here. I'm going to go find them right now. 1 second.
okay, while Oz is looking for those assets, I'd just like to make a comment about Lavdov's perspective. I think I agree. First of all, we actually notice that people react to news much faster than they used to, because they seem to be trading online more, and retail traders now have much more significant impact than a few years ago. And also, with relation to liquidity, I don't know about other markets, but in crypto, we see that besides Bitcoin, there is not so much liquidity as we've seen in all other altcoins there. So it's absolutely true.
Right, hold on.
And
I'm gonna run you the
yeah,
list. XRP, Ripple, XLM, Stellar Lumens, XDC Network, which is XFin, Algo, which is Algorand, IOTA, QNT, which is the Quant Network, Hedera, HBAR, FLR, which is the Flare Network. These are all compliant,
okay,
and
those
so
are 8,
because
not 6,
yeah,
8.
sorry, there were 8. I told you, man, chemotherapy will ruin your mind.
Mhm.
Um, but those are the ones that are kind of in the ecosystem, and those are the ones I would keep an eye on, because they are going to experience market volatility, like upward market pressures, based upon how everything shifts in the next few months, right? In terms of them coming into the ecosystem, and then also what is the banking ecosystem going to do to drive into this. And then the last thing I'll add to that is that bank custody of crypto is right around the corner. That's coming. And there's a lot of OGs that are like sad about the fact that, they're not going to need wallets anymore. They might be able to do it through their banking app, that kind of a thing. But that's the mass adoption curve that it's going to come. And that goes back to what I was saying very early on. That's where, algorithmic trading and a bunch of these other pieces are going to be relatively significant in terms of this new cadre of folks coming into the ecosystem. And it's, again, I think it's going to be Wild West all over again between that and real world assets inside of the next year.
Yeah, that's interesting. Although, do you have like any assumption why exactly those eight tokens were selected for this basket?
They weren't selected, they're compliant, right? And so the compliance basically means so like XRP and Stellar actually have an integration with banking systems and Swift networks right now. And I think I mentioned that before, that Stellar had been working on this with IBM, like going back, I mean, it's almost 10 years now. But what you're looking inside of this ecosystem is that we're probably going to have a couple of CBDCs popping up in the next year.
In the
Um,
US or globally?
globally. I am not going to speculate publicly on what's going to happen in the US. I will say we are moving towards adoption of most of your mainstream cryptos plus these eight. But in terms of a central bank currency, I don't know if that's on the horizon just yet. Nor do I want to speculate what the Trump administration is going to do. But I will tell you that from Africa to the Middle East to Europe, you get a multitude of these coming out. And there's a Euro coin coming out this fall. Let's see if it gets more adoption than the last time they tried pushing that one. But those are things to kind of factor in, because as we move away from this meme coin ecosystem, you're going to have all of these things trickling up. And I do apologize. I have a hard stop at 11:30.
Yeah, I think we are already running up to the limit of our run time. Anyways, thank you very much for joining
Mhm.
this panel, and yeah, we would be very happy to see you again sometime in our upcoming panels. Thank you for all your insights. And yeah, I'd like to give a big shout out to Quantum Expeditions and Quantum Economics, and incentivize everyone to go and follow them on X and other media and check what they're doing. And as for us, yeah, SuperTrade is a corporate
You
firm.
can find me at OZFORNY on Twitter. If any of you need assistance with your real world asset tokenization projects, we're here to help. And we're just in the process of relaunching the site. But Sultan Interactive, which is becoming Sultan Group, is the RWA shop. And we've got multiple partnerships across the Middle East. And we're looking to help. So it's a real wild west out there, but stay safe, stack sats, and make sure you've got your wallets right.
Totally. Yeah, and I'd also like to remind our audience that you can check the QR code right in front of you and join our community with SuperTrade is a proprietary firm where you can get up to 100K in funding to trade crypto, also commodities, stocks, and Forex. And we have built a study app which gives you a number of onboarding lessons so you can actually get the hang of it before you jump into trading. And we are developing our academy and constantly update our community with trading ideas or trading view. Professional financial analysts are writing those daily so that you are always informed where else you can get into various trades, but always adjust for your own risk tolerance and always do your own research. We thank Oz and also Lavdov, who probably had to jump because of some technical problems with connection. But see you next time in 2 weeks. Stay safe and yeah, have very successful trading experience. Until next time.
Take care, everyone.